good afternoon, good evening, ladies and gentlemen, and thank you for tuning in. We are so honored to have you this evening. This is our 9th session of season 2, brought to you by Balcon Housing and Stallion Construction Limited. So Get It Right with Atarah Solutions started the first episode on June 23rd, 2020. I am so proud of what we've been able to achieve so far. My name is Grace Nzula. I am a trainer and HR consultant with Atarah Solutions, an HR consulting and training firm that provides total HR solutions to employers and employees. At Atarah Solutions, we help employees who are seeking to improve their performance in their workplaces and those looking for job placements. We also assist employers implement HR systems, upskill their human resource, as well as find good talent. I am also a manager at Panessa Training Institute, a carpentry school. Get It Right with Atarah Solutions is turning 1 tomorrow. I cannot tell you this enough. Get It Right with Atarah Solutions is a webinar series that seeks to demystify issues in entrepreneurship and employment. In our season 1, we covered 26 episodes of different topics. So if you missed any of our sessions, they are uploaded on our YouTube channel, Get It Right with Atarah Solutions. There's a lot of knowledge uploaded on that channel. Oh my God, sessions that you would pay millions to get the information, from how to transition from employment into business to once we hosted Mr. Panessa, who took us through running a business for over 40 years. Again, we also discussed how to start a business if you're a startup, or how to decide which business to start, among other things. We have hosted KRA before. So allow me to just inform you why we started this series. Did you know that 22% of businesses fail in the first year? So all the businesses that started in January 2020 did not finish 2020 in December, 22% of them. Now, 30% of the same businesses will not finish December 2021. Now, guess what? By 2025, 50% of those businesses will have closed shop. And it gets worse. By 2030, 70% of those businesses will not be said to not celebrate their 10th anniversary. And this is the narrative we are trying to change. One of the reasons that came up when we were doing our research is lack of information is why most businesses are failing. And that is why we have gone ahead and come up with partnerships and also brought to you subject matter experts, industry leaders, because we discuss everything and anything that affects entrepreneurship in this country. As always, we have giveaways from courtesy of Kapula Mintito, an online shop based in Mombasa that sells mostly coastal goodies that are not only yummy to the palate, but nutritious. They sell things like cashew nuts, which are plain roasted or roasted and salted, etc. We also have baobab powder, birimbi, raw almonds, organic honey, sweets such as flavored mabuyu, achari, and dates. So if you're looking for your snacks, kindly visit Kapula Mintito. They have a YouTube and Facebook page. You can make your order from there. They also offer a shop for you service that runs errands for people who are out of the country at a small fee. This is based in Mombasa. So I have promised that we have interesting lineup for you in season 2. And I'm sure for those who've been following us, you can tell season 2 is lit. Today's session is brought to you courtesy of Balcon Housing, a real estate company incorporated in the year 2001. The company has successfully sold many parcels of land in different parts of this country. They provide both residential and commercial land for investors, individuals, and groups. They also offer property management services. They have a broad asset expertise complemented by their comprehensive property management services of mid to large scale properties, as well as Stallion Construction Company Limited, which is a construction firm based in Nairobi. I am honored to introduce our speaker of today, Madam Monica Gedhuba. She's not new, actually. This is our second session in partnership with KRA. If you missed the previous session, which we were discussing income tax and all that, you can find it on our YouTube channel. It's there. Please try and catch up. So today, Monica is a tax expert working in the domestic taxes department. She's passionate about shedding light on Kenya tax laws and KRA operations with the aim of making them simplified and easy to understand, thus cultivating a tax compliance culture and improving customer satisfaction. I know when we were sending out the flyer for the session today, a lot of people were saying, those who are dealing with KRA, hapana, au watu wanatusumbua. And then of course we had those ones of, please make sure I'm not left out because I really want to understand taxes. And I think that is part of why we have brought KRA on board, because we want to demystify what is required of you so that then you don't incur penalties, you don't, you're not slapped with something else, like a penalty or face some charges that you are not aware of. We are trying to shed as much light as possible so that we protect your business. I mean, we want more than 77% of businesses succeeding past their 10th anniversary. So, oh yeah, we have made it past the first anniversary of Get It Right with Atarah Solutions, because I mean, tomorrow we are celebrating 1 year anniversary, and that means we are going to go beyond the 22% that fail in the first year. So, and we really, really appreciate you, our listeners, because without you, we wouldn't be really here. So Monica, tell us, what does the taxman want on VAT and PAYE?
Okay, so thank you, Grace. So as you've heard, my name is Monica and I work in the Domestic Taxes Department in a division known as Taxpayer Services. And today we are going to learn. You can't hear me?
We can't see you, we can hear you.
My video is on.
Okay, there we go, sorry.
Okay.
Yeah.
Yes, so today we are going to try and demystify VAT and pay as you earn. And I hope that by the end of the session, you'll have understood these tax heads, how they apply to your business and what is expected of you. So I think I'll share my screen and start the presentation. And I hope that you write any questions that you may have on the chat box and I'll answer them at the end. So I think let me stop my video for connectivity purposes, and then I'll start it again when I'm done with the actual presentation.
That's fine.
So yeah, okay. So let's start. VAT and pay as you earn is our topic for the day. And before we start, we have this disclaimer. Of course, we endeavor to give you the most correct and up-to-date information. But in case of any errors, please note that revenue laws shall prevail. But we do our best to ensure we give you the most correct and up-to-date information. So the areas we're going to cover today is a brief introduction. And here we're going also to cover types of taxes. We're going to go to VAT concepts and principles, withholding VAT and VAT refunds. Then we're going to look at pay as you earn, voluntary tax disclosure program, and finally, integrity and access to information. As you said, if you have a question as I go through the presentation, write on the chat and I'll answer it at the end. We start with the introduction, and this is the types of taxes. So of course, government have to collect taxes. And most government will use several ways to do that. Yeah, they'll collect some direct taxes and some indirect taxes. Direct taxes are payable from your taxable income. For example, corporate income tax for the companies. We also have turnover tax for SMEs. We have capital gains tax on property, sale of property. And these are the taxes that you pay from your taxable income. To collect these taxes in Kenya, we are guided by the Income Tax Act. And the session we did last time, we covered that in depth. Today, we're going to be talking about indirect taxes. And one of the examples here is VAT, or value added tax. So this is where a business person collects from the customer and pays to the government. So in indirect taxes, the government is targeting, for example, consumption within Kenya. But the government has no link between them and the consumer. The link is you who sets up a business to supply taxable goods and services. So these are taxes that you collect on an agency basis, and they are not part of your business income. As we're going to see, VAT is one of the indirect taxes that we collect. We also have excise tax on accessible goods and services. We also have another agency tax known as pay as you earn. Pay as you earn is tax on employment income. As an employer in Kenya, you're supposed to deduct taxes from your employees and remit the same. We're going to see how that works and what are your responsibilities as an employer. So with that, we start off with the VAT. So we are guided by the VAT Act of 2013. This act is available for download. If you just Google the VAT Act of 2013, Kenya, you're going to find it. And it's an act, it's quite small, it's not a big act. And we find we have a charging section, that is section 5 of the VAT Act, which gives us the authority to collect this tax. Value-added tax is a consumer tax on taxable goods and services. So not everything we buy or we consume is taxable, but VAT is a consumer tax. So the consumer of taxable goods and services bears the burden of this tax. But the person who sets up a business in Kenya becomes an agent, or registers for VAT, becomes an agent and collects and remits this tax on behalf of the consumers. So VAT is charged by registered taxpayers only. You cannot charge VAT unless you're registered. And registration is done online via your iTax profile. So if you want to register for VAT, you log in, you tick the obligation under your iTax profile, submit your application, you're going to get a KRA task, and an officer is going to verify this tax and give you feedback on whether you've been registered for VAT or not. So we're going to see what is expected of you when you become a VAT registered taxpayer, but let's go to some of the VAT principles that apply to this tax. So VAT registration, if a person has supplied or expects to supply taxable supplies, taxable goods and services whose value is 5 million and above within 12 months, they must register for VAT within 30 days. So VAT registration is not mandatory if you have an annual turnover of below 5 million. But when you get to the 5 million per annum, you must register within 30 days. And this is where now most Kenyans encounter issues. They start their company, they are told, oh, you need to get VAT obligation, and they get the VAT without knowing that this VAT has a threshold, and it also has requirements or controls in place that you need to put in to operate it. So we would advise that you seek further guidance on before you register for VAT to see whether the supply you're making is actually taxable and whether you need this obligation or not. As we go through this session, you find out that you have VAT, but you don't need it. You can apply for e-cancellation via your iTax profile. Of course, we're going to do a check before we cancel any of these obligations. So registration is done online via your iTax profile, and get the obligation on your iTax, on your PIN certificate. So when you register for VAT and you get your PIN certificate, you're going to find the VAT obligation has an effective date of registration. This date advises you on when your return is due. VAT returns are due on or before 20th day of the following month. If you register for VAT in January, you need to file your return by 20th of Feb and also pay VAT by 20th of Feb. The Feb return is due in March, the March return is due in April, and so on and so forth. So for VAT purposes, remember to file your return every month. If, for example, you start your business or you register for VAT today, but in this month you don't make a sale, remember to communicate that to KRA by filing your nil return, as long as it's an accurate reflection of your affairs for that month. Let it be a true account of your affairs. So remember to file your return every single month if you have a VAT obligation. So when you file your return and you're in a payment position, you can make your payments via preferred banks or mobile money. And you do this by making a payment registration again on your iTax profile. Go to payment, make the payment registration. The information is going to be pulled from your return and you'll be able to pay by your preferred bank or mobile money transfer. So that's the principles of VAT. And one of the key one here is the 5 million threshold. So if you're below the 5 million, you can opt or volunteer to register for VAT, but you must comply with all the conditions that we're going to talk about today. So in VAT, we have classification of goods and services. You've heard me say that if a person has supplied or expects to supply taxable goods and services. So not all goods and services are VATable, and we find that the VAT Act classifies the taxable supplies into two major categories, exempt and taxable. Exempt are goods and services that do not attract VAT, and they are listed in the VAT Act. So in the first schedule of the VAT Act, part 1, you find the exempt goods. Part 2, you find the exempt services. These are mostly essential services. For example, the masks that we're using now, they are not VATable. So you can see that this being a consumption tax, if VAT is added, the item or service becomes more expensive to the final consumer. So you find that most essential services and goods, food items, they are exempt. But again, they are listed in the VAT Act. If the item that you're supplying or the service you're making is not listed as exempt, it is taxable. Then we have taxable supplies, VATable supplies, they're subject to VAT, and it's all other goods and services not listed under the first schedule. That is the exempt schedule. So for the VATable supplies or for the taxable supplies, we have 3 types of tax rates. One is 0% for zero-rated supplies. Against these ones are listed in the second schedule of the VAT Act. Zero rating is done mostly to facilitate trade. For example, exportation of goods and services. You find that we cannot export VAT. This is a consumption tax for consumption within Kenya. So when you export this VAT, it means that is a zero-rated supply, and the inputs that you've incurred can result in a refund. So you find when you're making zero-rated supplies, you'll be in a credit position, and that credit position will imply that your funds are tied there. So the taxpayers making these kind of supplies are entitled to VAT refunds. The examples is exportation of goods and services, goods supplied to EPZs, public bodies such as the police, because they are going to consume those services to provide us with maybe security. So they're not using that for their own use. So you find in such cases, the supplies are zero-rated. So 0% for VAT purposes is a rate. So then we have 8% for the oils, motor spirits, diesel. Again, that's clear. Then 16% is the other general rate for all other goods and services. Examples here of other zero-rated supplies is exportation of goods and services, transfer of a business as a going concern, supplies to EPZs and such. Exempt services here you can see maybe educational services, social welfare by government, medical burial services. So you can see the kinds of services we're talking about here are essential. And for the zero-rated, we said it's where the consumer is out of reach. For example, they're in another jurisdiction, we're not going to export our taxes, and we want this taxpayer, the business person, not to bear the burden of this tax. So we must have a VAT system that captures that and refunds them the inputs that are attributable to their zero-rated sales. I hope that's clear. You can ask your question as we continue, and I'm going to answer at the end. Another key principle in VAT is a tax point or a time of supply. So you find that in a business, you might issue an invoice, but then this person pays you 3 months later. Or maybe you make the supply, you provide the services, but they don't pay you immediately. So VAT has a tax point that you need to consider. The tax point is important because it will tell you which VAT period a transaction belongs to and on which VAT return to include the transaction. It is the earlier of date of issuing of the invoice, delivery of goods or performance or services, receipt or part of full payment on account of the supply, and date a certificate is issued. So you find that if you issue an invoice but you've not been paid, you need to declare that VAT in that month that you have made the supply. If you issue an invoice, if you issue an invoice and you're not paid, ensure you declare the VAT in the return of the month you issued the invoice, so that you cater or you bring into consideration this tax point. So what this implies is that as a business person, you need to plan your affairs in a way that does not put you in a negative tax position, because we need to be able to match your inputs versus your outputs. So remember, the tax point is very, very important. And in case we do our compliance checks and find that you've not adhered to this, we are able to backdate the supplies to the relevant date and charge some late payment penalties. Further understanding of the VAT operations, I'm sure you've heard me say it works on an input-output principle. And we say this tax is not targeting the business person, it's targeting consumption. So how do we ensure that this business person does not bear the burden of this tax? They are allowed to claim the inputs, but they must claim the inputs within 6 months. So input tax is VAT on purchases, output tax is VAT on sales. When you register as a taxpayer, as a VAT registered taxpayer, you're supposed to charge VAT on all your taxable supplies, and you're supposed to issue proper invoices. So the VAT Act has very clear guidelines about what a proper invoice is going to contain, but some of the key elements is PIN, your PIN, date of the supply, brief description of the item or service that you're providing, the amount before VAT, the VAT charge, and the total invoice value. And also of importance is a serial number that is unique to that invoice. So you can see VAT requires a taxpayer to be quite formalized. So issue a proper invoice and receive a proper invoice so that you can claim your input tax. VAT on purchases, input tax, VAT on sales, output tax. So therefore, VAT payable is output tax minus input tax. If your output is 2 and your input is 1, VAT payable is 1 shilling. That's what you pay to KRA on or before 20th day of the following month. If your output tax is 1 and your input is 2, it means that you have a negative 1. This is called a credit that is carried forward to the next month. But in a profit-making entity, we don't expect you to be on a continuous credit because you're buying something at 100 and maybe selling at 200. So we expect you to remit the value you've added and maybe expect a taxpayer to be on a credit when they have maybe stocked up, or maybe a new business person has bought some, let's say it's a uniform shop, they've bought their uniforms, they stocked up. We understand when you're in a credit position when you're starting your business. But with time, we expect that you get into a payment position unless you're making zero-rated supplies. So that, I hope that is clear. Again, ask any questions that you may have. So to understand this, let's go to some VAT operations, the chain of supply. Again, further understanding. I hope you leave this session understanding the VAT concept, that it's so clear. How does this thing work? So here we have a chain of supply, a normal chain of supply from manufacturer to consumer. Let's assume there's a manufacturer of some bags. They have to buy some raw materials to make this bag. That is their input. The VAT they are charged on those raw materials is their input VAT. When they are selling to the wholesaler, they are going to charge some output VAT. The difference is what they remit to KRA. When we get to the wholesaler, they bought these bags from manufacturer. So that is their input VAT. When they sell, they charge some VAT. The difference is what they remit. Retailer does the same thing. He has bought from wholesaler, and when he sells to consumer, he charges VAT. He remits the difference. And that's why this tax is known as value added. So you're remitting on the value you've added as part of this supply chain. When we get to the consumer, you can see this has changed now. This consumer is not VAT registered. The consumer in this case is me, who goes to that maybe supermarket and buys the bag for my own use or maybe to give to a friend. So the burden of tax is on me. Only that every part of this supply chain has remitted a part of the VAT, but I'm the one who has borne the full burden of this tax. And what you find with VAT is that we have regulations to ensure the manufacturer, wholesaler, and retailer are doing their part. One of these is an electronic tax register. So this is a device that you're supposed to have at your shop. Because as KRA, we are not with you in your premises to check are you charging VAT on every supply. So this device is a device that retains a memory. As you issue your normal invoice, you attach your ETR. And then this ETR can produce reports that now we can use to compare with what you've put in your sales invoices and also what you've declared in your returns. So the electronic tax register, the tax register is a device that you have so as to ensure that everybody in this supply chain is doing their part. You can imagine if one of these people decides to pocket the money, they distort the whole supply chain and introduce issues of integrity here. So we are continually coming up with control measures to ensure that our taxpayers are complying. Another control measure that has been put in place is that when you're filing your return and you claim your inputs, you will not be able to submit your return until the seller declares, because we are all in the same economy. So if you're saying you bought from A, we want to see that A has declared the same before you can claim it in your return. And what that does is it forces business persons to work with people who are complying. So we are going to a place where we need every business person to be accountable, and you find yourself weeding out business people who bring you inconsistency issues. So that's the aim, to ensure there's integrity in this supply chain. And in the coming few years, or in the next 1 year, we'll have electronic tax registers. And these registers are supposed to be able to connect with the KRA systems and submit the information immediately or on real time, so that you find this device is an automated device. As you work in your business, as you operate, as you install it in your point of sales, it transmits the information to KRA. So this is again in line with ensuring that there's integrity in the supply chain, and KRA has to use technology to continually enhance tax compliance. So watch out for that. I'm sure we're going to invite our VAT registered taxpayer for trainings on the electronic tax invoicing system. So that's the chain of supply. And here we have an example, so as we can see what is this VAT and how does it really work. So we have two transactions here, transaction without VAT and a transaction with VAT. So you as a business person, you're not VAT registered, you go buy your raw materials and you cost and you find this is 100 shillings. This is what I've spent, my buying price. Then you do your costing, you add your transport, your margin, and you decide, for me to make a profit, let me sell this item at 200. Your margin, we can see, is 100 shillings. That is what you as a business person retains. We go now to a transaction with VAT. Your buying price is still 100, but now because you're buying from VAT registered taxpayers, it will be 116. They'll add 16%. When you get the selling price, 200 times 116, the same thing you've decided, for me to make a profit, let me sell this item at 200. You charge VAT to your customers and your selling price is 232. VAT payable is output tax minus input tax. So the VAT payable is 32 shillings minus 16, giving you 16 shillings. Your margin is still, your selling price minus buying price is 116. 16 shillings is what you remit to KRA and you retain your 100. So in both transactions, I hope that you can see that these taxpayers have retained 100 shillings, and that is their business income. So VAT does not affect your margins, and the burden of this tax is borne by consumers. This is both taxpayers' business income. In this case, business income liable to direct taxes is 100 shillings. So I hope that clarifies on VAT and how the burden actually falls on the final consumer. Another concept that you will encounter as a VAT registered taxpayer is withholding VAT. So in Kenya, we have a self-assessment system. A self-assessment system means we rely on our taxpayers to give us their returns and say, this is what I've sold, this is what I've purchased. Then we put some controls in the systems to just ensure that everybody is doing well or doing their part. So withholding VAT is one of those controls that has been placed into the system, into the economy, to ensure that but we know who is charging VAT, and also we are able to enforce and know if are you declaring your full amount. So VAT withholding agents are appointed by KRA. They are given appointment letters and they are required to withhold VAT at 2% where they have been charged VAT at either 16% or 8%. So sometimes you're going to issue an invoice to maybe one of your clients, and you don't know they are withholding agents. Then they tell you, I've been appointed as an agent and I have withheld 2%. They're supposed to withhold this 2% and remit the same. Note this 2% is a small portion of the tax that you're supposed to pay that has been deducted at source and remitted on your behalf. So when this is done, it goes as a credit in your iTax ledger. When you come to your payment of VAT at the end of the month, you're going to reduce the VAT payable with your withholding tax credits, withholding VAT tax credits. So for example, in this case, let's assume I am the withholding agent and we have a Kamau here who has invoiced me. He has given me an invoice, value of taxable supply is 154,500, charge me VAT, and I have the total invoice value. As a withholding agent, I'm supposed to take 2% of the amount before VAT and make a payment on iTax. When I make this payment, Kamau is going to receive a message or with a withholding tax certificate in their ledger, in the email that they gave to KRA. And when they go to their iTax ledger or iTax account, they're going to find they have a VAT credit of 3,090. So at the end of the month, Kamau now needs to file his return. When he files his return, he'll make his full declaration, the sale at 154,500 plus VAT at 16, and then 179,220. But now when he comes to the actual tax due, he already has a payment done on his behalf. So if his tax due is 20,000, he'll be required to pay 20,000 minus 3,090. So he's going to pay about 17,000. So withholding tax tells us who is charging VAT. And also if you have your 2%, we can already estimate your 100 and we're able to ensure there's compliance. So I hope the withholding VAT concept is clear, and this can only be deducted and remitted by appointed agents only. If you have any questions, please ask on the chat, And then we have another issue here of VAT refund. So VAT refunds, I'm sure you've heard of this and wondered, can I have a huge credit in my VAT ledger? Can I apply for a refund or not? So VAT will be refunded in the following cases. We have VAT on bad debts after a period of 3 years from the date of the supply. So you might have, as we remember the tax point, you might have provided a service and invoiced and declared in the right month, but then you've not been paid. So if that is deemed a bad debt, as per the provisions that we have here, then you can claim a refund of the same. We also have VAT paid in error. If there's any VAT that you've been charged and you're not supposed to be charged, maybe that was an exempt supply, and then you are charged at 16%, then that VAT paid in error can be refunded. You make your application via your iTax profile. Excess credits arising from zero-rated supplies. We say that VAT is a tax on consumption. So if the supply is zero-rated, it means that we want to ensure the business person does not bear the burden of this tax. So we refund them the VAT that is attributable to their zero-rated supplies. And they have to make the application, go through a verification process before this money is refunded. And I'm sure you've heard about VAT refunds in the news because they're given high priority. We want to facilitate our business people. And so you find that we don't want their cash tied in input VAT, and they'll be refunded these monies. Also, where you have maybe most of your clients are withholding VAT agents, you might find yourself having credits, excess credits arising from withholding VAT. And in case of that, you can be refunded. So to apply for a refund, you just log into your iTax profile and go to refund, choose the VAT refund, and the system is going to pull all your overpayments or your credits, and then you submit the application and go through the process of verification we've talked about before you get the refund. So that brings me to the end of VAT, but I can summarize the key concepts of VAT. That VAT registration is for a must for taxpayers who are making taxable supplies of 5 million and above in 12 months. They must register within 30 days. Returns are filed every month on or before 20th day of the following month. This is also the due date for making any payments. You must issue proper sales invoices and also get proper purchase invoices. And here I'd like to note that if you're buying your purchases from a supermarket, ensure you go to the counter and ask them to give you a proper invoice. Because if you cannot use those small invoices that we get to claim, because they don't have the details, sometimes they are rubbed off, and we might come 5 years later to ask for the same records, and we cannot even verify using those receipts. So go to the counter and tell them, I'm in business, please declare me as a line item and issue me with a proper invoice. You find that for huge businesses, they're allowed to lump their sales to non-registered taxpayers as one figure. So if they put you in that one figure, you're going to find yourself having VAT inconsistencies. So another key thing we've said for business people in Kenya that they need to remember is that VAT is a consumption tax. Because some taxpayers will say, I've paid income tax, I've paid VAT, I've paid PAYE, and we need to remember that the TOT or the corporate tax is your direct tax, and this is an indirect tax that you charge and remit as part of the supply chain that gets taxable goods and services to the final consumer. So I'm sure the questions are going to maybe show me where I need to maybe clarify further. And so I'll go to the next part, which is pay as you earn. And pay as you earn is tax on employment income. And to understand pay as you earn is just imagine two employees, A and B. Both of them are earning 100,000, but B has other taxable benefits. They have maybe a car, they have a housing benefit. So we cannot tax both of them at 100,000. We need to assign a value to B's benefit and add it to their pay and tax them on the same. So you find A is paying taxes 100 and B is paying tax at 100 plus all the other benefits. So they might end up paying taxes on 200,000. And that ensures there's fairness into the tax system. So any cash payments and value of non-cash payments or cash benefits exceeding 3,000 per month. And this means any cash that you're receiving from employment income in respect of the services that you're rendering is subject to pay as you earn. Charged on both residents and non-residents, but non-residents do not get personal relief. Tax is accounted for by employers only. So as an employer, you need to deduct the pay as you earn from your employees and remit them by 9th day of the following month. So the taxable employment income is 24,000 or income above 24,000 per month. Some of the taxable benefits, I can see that time is running out, so I'm going to try and do my best to move a bit faster. But some of the taxable benefits is a car benefit. Car benefit is where now the company has provided a company car to one of the employees to use for private purposes. So they'll find that they must pay taxes on that car at 2%, the higher of 2% of the prescribed values, 2% of the initial cost or the commissioner's prescribed values. Housing benefits, if you're provided with a house by your employer or they're paying rent on your behalf, then there's a taxable benefit on that. Owner director is at 15%, whole-time service director, owner director is at 15% of total income. Whole-time service director is at 15% of employment income. And we also compare that with the market rental value or rent paid by the employer and choose the higher of the three. Other employees is at the higher of 15% of employment income, actual rent paid at arm's length. So I think that summarizes the housing benefit. And here we talk about the employment income not chargeable to pay as you earn. So there are some benefits that you get from employment that are not taxable. For example, meals provided by employer to employee at 4,000 per month per employee. So the snacks, the tea, maybe the lunch, if it's below 4,000, it is not a taxable benefit. Mere reimbursement for expenditure, maybe you use a taxi for official purposes and you've been reimbursed that money, not a taxable benefit. Medical cover by employer, again, not a taxable benefit. Pension contribution by an employee to a registered pension fund is an allowable deduction against taxable employment income, but up to a maximum of 20,000 per month. So we're going to see an example that is going to show us how that becomes an allowable deduction. We have some reliefs that maybe you need to take advantage of. These are incentives for individuals in Kenya. So insurance relief, employers is required to grant relief to any employee who has insurance policies for life, health, and education for yourself, wife, or child. The relief is at 15% of the premiums paid, up to a maximum of 60,000 per annum. So that amounts to around 5,000. And these are reliefs that reduce your tax burden as an individual. So if you have policies that you need to provide these policy documents to your employer so that they can allow you this relief. The education policy has to have a maturity of at least 10 years. We also have mortgage interest deduction. This is to encourage people to borrow and invest or buy a home, not just borrow, but buy a home. So when you take up a mortgage from the financial institutions that are specified or given the authority to provide these mortgages, to purchase or improve your premises, you get a mortgage interest deduction of up to 300,000 per annum. So that amounts to 25,000 per month. Again, another relief that reduces your tax burden in a legal way. We have the personal relief of 2,400 that residents can get or must, that is given to all resident individuals. So here we have the payee bands, 0 to 24,000 at 10%, the next 8,333 at 25%, any amount above 3233 at 30%, and you get your relief at 2,400. The beauty now of having iTax as in the format that we have it is that the Excel sheet that you use to file your return has all these formulas. So it's going to calculate the rate of tax and apply the rate of tax on your employment income and give you the tax due. So here we have an example or a summary of all that we've talked about. We're going to look at, because of time, we're going to look at the rates effective 1st of January 2021. So this person has a gross employment income of 112,000, less the allowable deduction. Mortgage interest, we said, up to a maximum of 25,000 per month. So this person has a mortgage, so they're given 12,000. Pension contribution is 5,000. We say there's a maximum of 20,000. So you find that taxable pay has reduced to 95,000. Again, these incentives are available to every resident person, and you can you can inform your employer that you have these policies, or the mortgage interest and also the pension contribution will be clear to get the relief. So the rates of tax are applied on this income, and we find the total tax payable is 23,283. This person is entitled to a personal relief of 2,400 and then insurance relief for health, life, and education, up to a maximum of 5,000. In this case, their contribution is 3,000. So they get the full 3,000. You can see the tax due is 17,883. So those are the maybe tax sort of secrets that most people may not be aware of, incentives that we have as residents and how we can apply or use them or inform our employer about them so that they can pass these reliefs. If they don't pass the reliefs, then you end up with an overpayment. You need to apply for a refund, and you're involved in that long process. We are almost there, and now we go to voluntary tax disclosure program. As you can see, this is a very positive vibe, because we believe in second chances. As KRA, we are giving you a second chance to disclose your previously undisclosed tax liability. And you're disclosing this to be given relief of penalties and interest. This program will be open from 3 years, from 1st of January 2021 to 31st of December 2023. And the disclosures that are eligible is 5 years prior to 1st of July 2020. What this means is that as a taxpayer, if you know that you have some gray areas, you have some individual income tax, capital gains tax, VAT, or any taxes that we collect as a domestic taxes department that you've not declared, you can declare these liabilities. for the purposes of being granted relief of penalties and interest. So when you come in, we're going to put you on a payment plan of up to 12 months for the principal tax, and then you're going to get relief of 100% for the penalties and interest for payments made in 2021. For payments made in 2022, you're going to get 50% relief of penalties and interest. Payments made in 2023, you get relief of 25% of the penalties and interest. And most penalties you find is 5% of the tax due and maybe 1% interest per month. So you find that maybe tax that was 1 million 5 years back has grown to a huge amount. So this is an amnesty, and you're assured that we will not open up the same periods. When you get into this program, you'll be given a voluntary tax disclosure certificate that is going to show that you took advantage of this program, and you will not be prosecuted for the same set of facts. But you must declare all material facts. All taxpayers qualify and can apply, but taxpayers under audit, investigation, or party to an ongoing case involving their tax liability will not be eligible. So if you have further information or you need further information on this, please visit our website, www.kra.go.ke, and you're going to find we have more information on this and even the forms you need to fill and take to your tax service office. Finally, we have integrity and access to information. So KRA has put in place some measures to enhance integrity. One of these is automation of KRA functions. I'm sure you've interacted with iTax. So this system is automated, we can produce reports, it can audit itself, and this enhances integrity. ICMS, ECTC, DPC, these are custom systems with the same aim. We also have a taxpayer's charter. This is your document as a taxpayer. It spells out your rights and obligations, our services, the records that you need to provide, maybe if you're requesting for a waiver, the timeline it's going to take. So download this document from our website for your own reference. We have establishment of an intelligence and strategy office that oversees integrity in KRA via lifestyle audit, vetting of staff and such. Training of taxpayers on integrity, what we are doing now to ensure that you know there's a part you can play. We also have investigation of staff and tax evaders by the Investigation and Enforcement Department, and also the KRA Code of Conduct. We have a code of stipulates we must be trustworthy, ethical, competent, and helpful. And now we are adding simplification because we want to make it easy for you as our taxpayer to pay your taxes. And we want you to understand that we have transformed, and not just understand, but experience our transformation. So I hope you have experienced that change. And in case we violate some of these values, then we'll give you the channels to make a report. We have an anti-corruption policy, a gift policy, and a whistleblower policy. Anti-corruption deals with the cases from investigation. Gift policy, employee of KRA is not supposed to receive any monetary gifts, and the non-monetary gifts must be below 20,000 Kenya shillings. Whistleblower policy protects you when you provide information to KRA, and we have an online platform known as iWhistle, where you can make your report anonymously. We also have an informal reward system for those who want to be paid. KRA pays you 5% of the taxes recovered from the information given up to a maximum of 2 million. So corruption reporting mechanism, 26 floor times tower, hotline number 0726984668. You can email corruptionreporting@kra.go.ke. And also if you have any complaints, you can send the complaints to cic@kra.go.ke. And also write letters to the CG. So I think I've rushed through that last part, but I hope that some of the tax concepts are clear. And this is not the end of our engagement. We have sessions every first and second Thursday of the month. So of course, we don't expect you to get this thing once and like hear it once and you know everything about taxation, but maybe you've gotten something and now we want to build up on that. So keep building the fire, and we have an email, kra@kra.go.ke, where you can request that. We invite you for training sessions. So I think with that, I'll take it back to Grace so that we can do the Q&A, as much Q&A as we can. Yeah.
Wow, I'm about to clap for you, Monica. That was so enlightening. Allow us, and it's 8:55. And this informative session is brought to you by Atarah Solutions in partnership with Balcon Housing and Stallion Construction Limited, as well as Kenya Revenue Authority. So we have quite a number of questions, and I hope our listeners will be keen enough to allow us to answer as many as we can, even if we go past 9. I hope you're patient enough, because we really would like this to make sense for you. So there's somebody who's asking, thank you for the session. Kindly, can the tax expert let us know if a company is dormant and does not, if a company is dormant, does it need to file returns every month, and they don't want penalties? I'm talking where the company has no bank accounts and all partners have gone different ways and the company has no operations at all.
So the first thing would, if you still, your PIN is still active, you need to continue filing your returns. But if the partners have, the directors have gone their way, you can dissolve that company and deregister or cancel the PIN. But also there's an application for dormancy that some taxpayers may make, but dormancy is for a specific period in which now you don't need to file your returns. After the period expires, you go back into the system.
Okay. So, and then there's this, there's the law that used to be when a new company is formed, they have 18 months to file their returns. But the other day, my friend was slapped with a penalty for filing. They registered in 2019 June, and they were filing their returns in 2021, and they had a 20,000 penalty. How does that work? Because it now does not even make sense.
So for new companies, there's that allowance where you can prepare your books of account for 18 months. And you see now the thing that needs to happen is communication with your tax service office. The client needs to visit the tax service office, and it's on their PIN certificate, and explain the scenario to them, and they'll be helped going forward.
Okay. So Mary Moguna is asking, what is the difference between zero rated and exempt?
So zero rated is at 0%, VAT is at 0%, and taxpayers who make zero rated supplies are entitled to a refund of their attributable to, they're entitled to a refund. Yes? Hello?
Okay, I think she's having a bit of a technological, oh, it's me. Okay. Sorry, so, Monica, just go ahead.
Okay, so I was saying for the zero rated supply, these are taxable supplies, but at 0%. But this taxpayer, yeah. Okay, I hope you can hear me. Please. So zero rated supply at 0%, and the taxpayer is entitled to a refund of the input VAT attributed to these supplies. But for the exempt, we say these are essential goods and services, and they do not attract VAT. I hope that clarifies that. I can't seem to hear you. Okay. Yeah.
My internet had a problem. So there's a question by Kate who is asking about a delayed payments and filing of returns. So if you have, okay, let me just, so what happens if you are paid 1 year down the line and you issued an invoice? Do you feel what happens to the payment? Because now if you're paid later on, how or where do you get the funds for that VAT and you have not been paid? By the way, this is a question for most of us.
Oh my. So what happens is that you need to file your return as expected. Declare that sale in the required VAT return, considering the tax points that we talked about. But now we have things we call payment plans. So what you file the return, and then you see, okay, I can't pay because I've not been paid. Approach your tax service office and explain this to them. So we have payment plans, and we also understand that maybe some government agencies take time before they pay. So we will facilitate you if you're willing to pay. approach your tax service office. Don't shy away from visiting.
Like in the Monica, most of them don't. We need to do
now
something.
There's nobody who can refuse a payment plan, especially in this time of COVID. We have enhanced that functionality so much that because we understand what our taxpayers are going through, and if you don't have the money to pay the taxes, you actually don't have it. So don't fear. And the payment plans that we give are determined depending on your ability to pay. Your ability to pay is determined by your cash flow, the monies that are flowing and all that.
Okay. Yeah. I understand that. As Rachel was asking whether you can pay, you can claim VAT, sorry, for a 2-month-old receipt. So can I use last month's receipt to claim for this month?
Yes, input VAT can be claimed within 6 months.
Oh, okay. Timothy is saying, I supplied goods to a client where they paid and withheld the entire VAT amount. How do I handle this input and output when filing? Thank you.
So they were not supposed to do that. They were not supposed to withhold the 16%. They were supposed to withhold 2%. But I think you still have the credit. So the one workaround you can do is you declare the full sale in your VAT return. But when it comes to the withholding credits, you claim the total credits that are in there in that month. And that is going to cover you because you already have the amounts that are in your ledger. Claim them when you're filing the return, and it's going to capture that. Okay.
And then what happens to me when someone fails to remit withholding tax? What can I do when this happens?
So when our agents, because they are KRA agents, do not remit the taxes, the Tax Procedures Act states that this tax is due and collectible from them as if it was due from them. But you as a business person are not advised to follow up with them. You provide this information to KRA and we do the follow-up on your behalf.
Oh, okay. Yeah. Now, how do you know, how do you appoint agents? How do they identify themselves?
So the agents are appointed by every tax service office. So you find in Nairobi, we have like 3 tax services office, north of Nairobi, east and south of Nairobi, and then we have west of Nairobi. So each tax service office is going to look at its taxpayers and find out who are the viable withholding agents. And these are key players in the economy. So you find that most of the big taxpayers are withholding agents. And also now we are expanding this and including other players in the economy. When they are appointed, they get a withholding certificate that shows they are an agent. And also on iTax, we have an agent checker. So you can use it to verify whether this taxpayer is actually a withholding agent.
Okay. Somebody is asking, if a company has a mother company which files the returns and the subsidiary is dormant, does it need to file returns as well?
That depends on how you've registered this company. You see, every PIN holder, KRA PIN holder, has some certain obligations on their PIN certificate, and they're supposed to account for the same. So if you had not registered this as a branch and you had registered it as a separate entity with its own PIN number, then it needs to account for the obligations that are there on their PIN certificate.
Okay. Somebody else is asking, if you take money as a loan to the shareholder from the company and invest in treasury bills, do you record the books of as treasury bills?
So the thing would be, if this is a company, you're investing as a company. So you recognize that in your books, like any other investments that you're doing. And the income that is arising from that, you also declare it, or maybe the withholding tax will be accounted for at source. So what the thing would be, if you're going to invest as a company, then it's well within order, but also within your balance sheet, we expect to see that you recognize it somewhere in your books. I hope that answers the question. Yeah.
Okay. Somebody is asking, they were working as a casual employee on a daily contract from 2016 to 2017, then did not manage to file KRA return and was fined 20,000 shillings. What is the remedy to that?
So when you get a PIN number, you find you have a default tax obligation. And the way to tell KRA that for this, if you have not generated any taxable income, is to actually file your return. So when you don't do that and you come and try and file in the other years, you're going to get penalized for late filing. So that is there. The choices that you have is, one is to pay the penalty. The other one is to apply for waiver. But waiver, you have to give a reason, and the commissioner has to be satisfied that this is a valid reason as to why you deserve the waiver.
Okay, Boniface is asking, practically, we are facing challenges on inconsistencies every month when we are dealing with huge numbers of customers, like in the case of supermarkets. What is the best approach?
So as we said, for supermarkets, you have, as a business person, take it upon yourself to go to the counter. And we've talked to this supermarket, so they know. You go and tell them, I'm in business. Please issue me with a proper invoice. So they're going to issue you with a proper invoice and also declare you as a line item in their return. And in case you have inconsistencies for previous periods, they are also going to amend that return and declare you as one line item. So they can amend their returns, and also maybe you need to correct something in your return for the inconsistency to disappear. Remember, we're saying that those are the checks we have put in the system to ensure that our taxpayers are complying. And I know now it's a bit painful, but as we go ahead, we envision a process where VAT collection becomes easy for both you as a taxpayer and for KRA. So because of the way we were working before, we have to go through a painful process to change, to get to the new desired level of compliance.
Okay. Wilfred is asking, how do you claim VAT that has been paid in error over a period of time? Case in point, park entry fees.
Case in point?
Park entry fees. Uko kwenda National Park.
So, okay. So I don't know why you, is it, you see, we said that the VAT Act has has lined up everything that is a taxable supply and what is not a taxable supply. So we would have to verify that the service that you are charged VAT on is not a VATable supply, and we would have to actually see that invoice and actually see what was the VAT levied on before now I can proceed and answer that question. But for VAT refund, you claim this refund via your iTax profile. You find there's a refund tab, you click and submit the information that is asked from you.
Okay. Hezron is asking, where does KRA tax electricity supply? Yet it is an essential product and the employees in the sector, yet they offer essential services.
Employees in the sector. Every Kenyan, every person pays taxes. Every citizen of Kenya who is earning taxable income, who is generating taxable income, pays taxes. And also, like we say, we are guided by the VAT Act in implementing the collection of VAT. And if an item is not listed as exempt in the VAT Act, then it's a taxable supply, and that applies for electricity supply.
Okay, Susan Akwesi is saying, how is the VAT applicable for service provision, e.g. in healthcare? Is there input and output VAT for services? And if yes, how is it calculated?
So yes, there is VAT on services. Taxable supplies includes goods and services. But you find that most of the supplies in the healthcare sector are exempt. So again, we need to go into the Act and see what kind of healthcare services are you providing, and do you even need the VAT obligation, because most of your supplies are actually exempt.
Okay, and Sylvia War is asking, under what circumstances are stipends taxable? Please answer this because we have a lot of people on per diem.
So for per diem, there's actually information on the same here.
Yes, I saw that.
So per diems of up to 2,000 per day are tax-free. So any other amounts will be added to your pay for the month and taxed.
So all stipends beyond 2,000 is taxable?
Yes, unless we can see it's a mere reimbursement of expenses incurred. You know, sometimes you'll be paying for a hotel and then you reimburse the amount. So that is a mere reimbursement for expenses you incurred. Maybe you use a cab, you are reimbursed for that, that money was reimbursed, you have provided the documentation required, you have accounted for that trip, then all those things will be put in consideration.
Okay, there's somebody who was asking, how does rental income work? How does tax on rental income work?
Okay. So for rental income, we basically divide it into two categories. It's either commercial rental income or residential rental income. For commercial rental income, you pay that under the annual income tax system, where now you do your income versus expenditure, find your taxable profit, apply the rates of tax, depending on how you operate in your business, whether it's a sole trader or company or a partnership. And then for residential rental income of between 288,000 and 15 million, you pay your taxes at 10% of the gross rent received on a monthly basis. So outside the thresholds, you file under the annual system. So I hope I've not confused the taxpayer. Commercial property and residential rental income of below 288,000 per annum and above 15 million, you file in the annual tax system. And it's a system of income versus expenditure, pay taxes on your taxable profits. For residential rental income within those thresholds, tax at 10% of the gross monthly rental income.
Okay. Julia is saying, if a company opts for voluntary disclosure, won't they be an easy target for future compliance audits?
No, because it's not a witch hunt, it's an amnesty, it's an actual amnesty. And you will see that, or if you've been in the tax system for a while, then you know we've applied amnesties. For example, in 2016, we had an amnesty on rental income. And the taxpayers who came in can tell you for sure that nobody went into looking into their past or started to disturb them for further taxation or anything like that. But in a tax system, we don't just visit our taxpayers haphazardly. What we do is we do compliance, we do risk analysis and visit taxpayers who we find maybe they're not filing, they're under declaring and all that. So if you do take advantage of this program and you comply afterwards, we have no need to visit you.
Okay. Glenn is saying, if an employer does not pay your payee, and at the time of filing returns, you see an unpaid balance, what should one do? Can you file your returns with this balance there?
I'd say file your return, and then maybe that is a reconciliation issue that can be dealt with. So you can use the email cic@kra.go.ke to send us your PIN number and your employer's PIN number, and we'll be able to follow up and see. It might be just that your employer has paid and the credit has not reflected on your iTax profile. So we might just need to do some sort of reconciliation, but file your return with before the due date.
Somebody is asking whether they need to file returns on a business name or the company must be limited.
So if you register your company as a sole proprietorship, it means your PIN number, your personal PIN number and the PIN number of the business are the same. So when you're filing your individual income tax return, you'll have a question there that asks you, do you have any other income to declare other than employment income? When you say yes, the Excel sheet is going to open sheets that are going to allow you to declare your business income. And that's how you account for that business income.
Okay.
So also we have tutorials on filing of returns on our website so that you can see the actual process. And also on YouTube, we have tutorials which can guide you in case you need to know how to file your return.
Okay, this Sylvia is clarifying. I'm asking about stipends for academic purposes. That, for example, an employer paying you 50K per month to cover your out-of-pocket expenses while pursuing an MBA.
To cover your out-of-pocket expenses.
Yeah,
that
so
will be taxed.
Mm-hmm.
Yeah, because we've said here, taxable employment income includes all cash payment, however described. So if they're paying you an allowance, then it will be added to your normal employment income and tax will be applied.
Okay, somebody is asking, and this is the second time, at what point do you get inconsistencies in VAT?
So VAT, let's go back to this chain of supply here. So let's imagine I'm a retailer here and I want to file my VAT return. I want to claim some inputs from wholesaler. And then when KRA checks, it finds that this wholesaler has not declared a sale. So it produces an inconsistency and sends the report to both you, wholesaler and retailer. And what you're supposed to do is correct your returns or amend them. And for VAT inconsistencies, you can amend your returns as many times as possible. The ideal situation is that retailer and wholesaler converse and see who has made an error or who has not declared and correct the same. Sometimes it's because invoice numbers are different, amounts are different. So if you can converse and correct that as the two parties involved in this transaction, your inconsistency is clear. But where one party is not cooperative and you've done your part, then do your part and also communicate that to your CTS so that you've done your part, and we're going to follow up on the other party.
Excellent, excellent, Monica. I'm thinking we might not finish. So our second last question, and the person who is asking whether the notes will be shared, of course they will be shared for everyone who registered. We normally share, and this recording will actually be uploaded on our YouTube channel, so that then you can actually follow up later. Just in case you missed some part, or you just want clarity, or you want to sit down silently in your home and just go over what we have learned today. So all that will be done for you. But on our second last question this evening, we are going to take this question. If a company makes part payment of an invoice, should withholding tax be remitted? Should withholding tax remitted be on the part payment or the entire invoice?
So the invoice, you can see here, the invoice that you have issued is the guide, and the withholding agent is supposed to withhold 2% of the value of the taxable supply. So invoice is the guide.
Okay. Wesley is saying, is annual gratuity taxable? If yes, should it be indicated in an employee P9 or it's filed separately?
So for gratuity, because it's for services rendered, it is spread backwards and taxed and paid by the employer. The employer or the one who's making this payment is going to deduct tax and remit it. When you come to filing your return, you don't need to declare this again because the tax deducted at source is final.
Okay. The anonymous attendee who is asking about somebody who is earning 16,000, Monica said that tax bracket starts from 24,000. So that one is there. So Monica, I know I really appreciate that we could partner in this, and we need to shed more light and inform our audience and the country at large on VAT, on matters taxes. And there's one last question I wanted us to take. What is the procedure of applying for a waiver?
So waiver is applied for on your iTax profile. Again, when you log in with your PIN and password, you're going to find a red line, and under that there's debt and enforcement, and then you're going to find waiver. Then you apply for the waiver. The system is going to pull the penalties that you have, and then you submit, get a task number. That is the one that you use to follow up. So waivers are processed within 6 months, subject to provision of requisite documents.
Okay, and we have two people who are saying that whistleblowing policy, I am in doubt. Somebody else is saying something needs to be done about the attitude of most of the staff at KRA service offices. Most of them have this fall attitude that makes taxpayers fear those premises. I'm sure we can give that feedback because I know KRA is trying to change, and the fact that they are here with us today is actually part of the process in change and in making sure that instead of us going to them, they are coming to us and making sure that we are informed so that we can stop making mistakes and we file returns as appropriately and get into the culture of being compliant. So allow us to actually end this beautiful session here. Thank you very much, Madam Monica. You have really shed some beautiful light. And I think going forward, we are going to be more compliant. Thank you very much, our audience. This session is brought to you by Atarah Solutions in partnership with Balcon Housing. and Stallion Construction Limited. For the people who are joining us for the first time, this is called Get It Right with Atarah Solutions, and we are celebrating 1 year. Imagine we've been having webinars for the last 1 year. If you missed any of that, they are on Get It Right with Atarah Solutions YouTube channel. You can actually go in and actually, let me just put the link there because we need you to subscribe. Next week, we have giveaways in celebrations of our 1 year anniversary. So all of you stand a chance to win, and especially those who are engaging on the YouTube channel, you stand a chance to win. So I am hoping that you have learned. We still have Monica coming in again next month. We normally have these sessions with KRA once a month. So we have another session coming up next month, and we will let you know how that is done. So thank you very much, Monica and the team at KRA. Please say hi to Wanja and tell her asante sana. These sessions are quite informative, and we will share with you the slides for your future what is it called? For your future reference. So kindly subscribe to our YouTube channel, like our Facebook page, follow us on Instagram. So YouTube channel is Get It Right with Atarah Solutions. Facebook is Atarah Solutions. Instagram is Atarah Solutions. We normally also go live on Facebook. So in case you are having internet troubles or you have blackouts and your phone is still on charge, you can always log in and you'll get to catch up on what's happening on Zoom. So we have had quite a number of series, and I have seen the people who came first. We were asking, how has it been for you since you started joining Get It Right with Atarah Solutions? Because we are saying this is like what, our 40th episode or something like that. Last year we did 26 episodes. We are on season 2 and we are on the 9th episode. So we keep building the information. We keep encouraging you to tune in because these statistics must change. We cannot have businesses, 22% of businesses fail in the first year. Can you imagine? Those things have to change. So I really thank you for making the time to be with us. And please, let's see you next week, same time, same place, as we figure out, we will let you know what we have planned for next week, because I'm thinking, somebody was telling me we need to teach people how to file returns because it's the end of the month, but we will see whether to go that way. Although we had scheduled to have the entrepreneur of the month. We normally host an entrepreneur every month who shares with us their journey and how they've made it in business. So asanteni sana. Monica, we really appreciate you. Our audience, we cannot do this without you. So thank you very much for always making the time. And from us and our team, I appreciate you, Kevin and Jacinta, for always making this happen. From Team Atarah Solutions, it's good night.